I know. Why am I doing two streams in a day? Because I have a couple extra minutes. I'm going to do this one really quick, but and this will probably be my last video for like 6 months for all we know. But let's try to jump into it. We have a couple of ERs, not any of the big ones. Clearly, this last week would have been more fun, but I didn't have time to do this back then, so we're going to try it today. I'm going to walk you guys through my process for looking for strangles and straddles in ER land. So we have a couple coming up this week. We're going to take a look at some stuff here. I think I need to flip over to that mode. So here are the upcoming ERs this week, and there's a whole bunch of logos here that I recognize, and I haven't done a ton of research specifically on any of them, such that I've got like a real opinion of who's definitely going to have a beat, who's definitely not, right? Like I said, I've been away from the markets for a while here, so I've kind of lost touch a little bit, but that's okay. I'm not actually looking to play anything directionally if I play anything at all this week. For those of you that have watched some of my other videos, you'll know that I love strangles and straddles for ERs because they are high volatility events. And when we find ourselves with a substantial beat or miss, they can be very lucrative. I've got other videos that describe the details of strangles and straddles, but just for a quick overview here, it is an option strategy where you buy both a call and a put at the same time. The objective here with this is essentially to find stocks with enough volatility that the increase on the, because we don't care, right, in a strangle or straddle, we don't care if we beat or miss. That's what's great about these. What we care about is that we have an oversized move. Because essentially what we're depending on here is that either the call or the put will pay off enough to cover the expense of the losing leg of the trade. I've definitely had some very successful, I think like probably my best straddle was about a 1,200% play. I think that was on Facebook back in 2022 when they had a big miss. But we've definitely had some very other successful ones. Now, so the upside with this strategy is if you see a big move, you will almost certainly profit or at least cut down on your losses. The downside is if you get a flat ER, if you get a nothing burger release, then you run the risk of losing both your call and your put. So risk is on the table. Make sure you understand how this strategy works before you deploy it. If you're comfortable with the concept, then I'm going to walk you through really quick how I go through screening, looking for opportunities here, right? Again, I don't have any clue on directionality with some of these things, right? A couple of these logos I look at and I'm like, maybe there's a beat coming, maybe not. I don't know. We're going to go look at, I'm not going to call it fundamental analysis, right? But it's not technical analysis. We're not looking at chart patterns. We're going to actually go look at some of the metrics below the surface of some of these stocks for the ERs coming up here in the next 6 days. I'm going to show you guys my scanner. I'm going to tell you what I'm looking for in the results. And then you too will know a little bit more about at least my approach for looking for opportunities in ERs when they come up here. So let's flip over here. We've got Thinkorswim here in the background. Now, I'm going to give you a caveat here. I don't know how big your screen is or how well you can see this. I'm going to tell you what I'm looking at, but if you're having trouble kind of making out the specifics here, I will tell you what I did to get this scanner up and what values I'm looking at so that you can replicate this if yourself. I will tell you that I am relying in this approach, I am relying on a specific metric that is generated by Thinkorswim. So you can probably get the majority of this information from any scanner, you can look at it in TradingView or, MetaTrader, whatever you're using, like, I don't care. I'm just letting you know that there's a very specific value that is generated by Thinkorswim at TD Ameritrader, Charles Schwab. That is a key part of the strategy here. So I'll tell you what that is, and I'll tell you what I'm looking for here, and then you'll have to decide whether you can proxy that on a different one. If you're in Thinkorswim, good news, it's available to you already, and we can take a look. So first, let's take a quick look through what I'm scanning here. So I've got a scanner set up. I'm in my scan tab in the stock hacker. I've built out, this is a kind of a pre-baked scan configuration that I have and I use occasionally. I haven't played ERs in some time, just largely because of being away from the market. But I'll tell you what we're doing here. So the first thing that we're looking for is I want to know that we are getting into a liquid stock. So I did specify that I want a stock that has a volume of at least 630,000. I pulled this down a little bit in order to give us a few more results. Normally I would have this closer to like 2 million or 3 million. That just gave us kind of a fewer results than I wanted to for the purposes of this exercise. So I brought this down a little bit just to make sure that we had a few more results to parse through together. Next thing I'm looking for is the stock price. I want to make sure that we're over $15. So I don't want to try and play an ER on, like a $5 or $10 stock. Yes, if you have a big move there, you can really see some nice gains, but the percentages are a little bit tougher at that level, and it makes the strikes a little riskier. So I like to see kind of a lower percentage of the overall move as I go from strike to strike. So that's why I'm setting the bar here at 15, the minimum price of 15. Next thing I'm looking for is the options volume, right? So we can have a liquid stock, but a very illiquid chain. So we're trying to avoid that by making sure that we're trading at least 3,000 contracts every day. So those are the core filters, right? I want a busy stock with a reasonable price that has a lot of movement inside of the options chain. Finally, the last thing that I'm doing here is just adding a study, right? Essentially, I want earnings that show up anytime in the next 10 bars. I'm going to pull this back a little bit to 6 bars because I don't actually want to look 2 weeks ahead. I'm just going to look for the upcoming week. All right, you can see that cut us down a little bit further. There were a couple of options that I was expecting to see in here, but they're being filtered out by the current filter, and we're just going to leave those go. I might pull some of these out here at the end here just to see if there's anything that might be worth taking a look at the end. But let's take a look at what showed up here. So coming up in the next 6 days, for all of the things hitting my criteria, we got XP, Lemonade, Splunk, Li Auto out of China, Coupang out of China, TJ Maxx, Zoom, Advanced Auto Parts, Snow, BIDU, eBay, AI, and Mara. So pretty much, I'm not super familiar with Lemonade. Thought I heard the door knock. But the rest of these I'm pretty well familiar with. And if you guys aren't, do a little bit of research, find out what sectors they're in. But I'll talk through it a little bit. So off to the side here in the table, you can see I've got a bunch of different values here. We got, hey, what was the last score? Or what was the last closing price? What kind of change that they have on the day? I don't use these things so much. I'll tell you which ones very specifically I'm looking for when I'm talking about ERs. I am interested in the beta, the average to range, and the market maker move. This is the specific value that I mentioned earlier that is generated specifically by TD Ameritrade or Charles Schwab at this point. I will tell you what that is because I actually had to go look it up. I kept finding this little, if you ever look at a stock and it's got a little cluster of M's icon on it, that is indicating the market maker move. And essentially what this is it's an implied move by the market makers. Now there are ways to develop an implied move based on like the historical volatility, the current implied volatility, right? You can mix some of those things in. TD Ameritrade has some extra special sauce in here, and I've found some value in looking at that when I compare it to the other things that I'm looking for here. The historical volatility percentile, which tells us how volatile we are compared to the historic volatility for this particular sticker, and then the current IV, which kind of tells us where we're at the moment, right? So historical tells us how we compare to the past. The current percentile tells us where we're at right at this moment. So, and you can look, I've also got the sizzle in here, which is another kind of TD Ameritrade secret sauce. It's just an indication of increased activity. So it doesn't necessarily indicate volatility. It just means that, hey, there may be more volume in the call chain right now, which makes sense as we approach ER. So we're really going to focus on these guys right here. Largely what I'm interested in is a market maker move, right? An implied move that exceeds the ATR, right? So the market maker is expecting a move larger than ATR, and I'm looking for a low historical volatility number, right? So the historical volatility, I want to be on the low side. When we see something, so like I'm just scanning over here really quickly, I'll tell you right now, Snow, we're basically kind of at 50% historical volatility, which means we're pretty high, and the implied volatility itself is at 68, right? I'm going to tell you right now, I'm throwing this one out. I don't care that right now that the market maker move is, gosh, okay, I may take back what I just said. And I'm going to walk through my thought process on this. So I'm looking at right now, the market maker move, they are implying a $22 move when the ATR, the average true range, the expected move on any given day is about 9. So this is a pretty significant jump over the ATR, right? So the market makers are expecting a big move. What makes this a little more risky and a little less interesting to me is the fact that we are historically on the high side of the volatility, which means when we get the volatility crush after ER, it starts to increase the risk that even if we get a good move, that when the IV crush hits, that we're not going to end up with a good move. Right. So I'm not going to say that I'm definitely not interested in snow, but I will tell you that I don't think it's one of the higher, that it's a good risk to reward ratio. So we're going to focus on some of these other ones, especially when we look at the lower historical volatility. So XP, we're going to skip. Why? Because there's no market maker move there, so we don't have anything to compare to the overall ATR. So we're just going to pass that one. Lemonade, the ATR is $1. The implied move is close to $3, right? So now we're seeing about a 3-to-1 ratio where they are expecting the market maker move is going to be significantly larger than the standard move. The historical volatility, not bad. We're close to the lower quartile, but the IV percentile is off the charts, right? So we're at 100%, which means that it is very volatile. And we can see that from the sizzle indexes that there's quite a bit of activity going on. More activity, interestingly, on the call side than the put side. That just means that there's more people either buying or selling calls than puts. That doesn't necessarily mean a bullish bias from the market, but that is where we're seeing the majority of movement there. So Lemonade could see a nice move up, especially if that market maker move hits. I'm not necessarily interested in this. The historical volatility is low enough to qualify for interest, but I think the current IV here kind of moves that one out of interest for me. Splunk, another one. Now you can see on this one, the market maker move and the ATR almost the same, right? So they're not really expecting an outsized move, so I'm not interested in playing. Now the historical volatility and current implied volatility are pretty good numbers here, but I'm not looking, right? Like if we get a good beat here and it moves 60 cents, right, that might be a candidate for like a straddle instead of a strangle. But I'm just going to go ahead and move on from this one. Lee Auto, we got a 133 for the ATR, 3.6, so about a 2-to-1 ratio for the market maker move. Kind of looking at the high historical volatility. We're around the 50% move, right? So historically, we're kind of in the middle of the range, so we're not super low there, and the IV percentile is pretty high, so we're going to pass on from that one as well. Coupang, what are they doing? Now we got a 3-to-1 ratio there, relatively low historical volume or historical volatility, and not a bad IV percentile. So Coupang might be an interesting one, just kind of based on the process here. So CPNG could be worth a look as we go take a look, and we could go into that chain a little bit later on, but we're going to just kind of keep moving on through the process. TJX, same thing, about a 2-to-1 ratio for the market maker move. Historical volatility is kind of right in the middle, and regular IV is a little on the high side, so I don't think that's a massive opportunity. Look at Zoom though. Zoom, about $1.50 is their ATR. They are expecting about a $5 move, and the HV and the IV are low. So I really would be interested in Zoom for a strangle based on this information, and looking at the strike around the 60s. Yeah, so for a $5 move, if you guys have looked at my strangler strategy, I would generally say that I would take strikes about half of the market maker move or half of the implied move. So I'd be looking for strikes like $2 to $3 off of the current price. So if I was going to work myself into a strangle here over the course of this week, I might kind of wait for the price to undulate a little bit, and then and then buy in as the ticker goes up. Might buy puts. As the ticker goes down, I might buy calls. Right, that'll help kind of make sure that you're in a good spot for when the move goes. And if you pick up a handful of those, you can actually play the run up to ER, take advantage of that increasing volatility as we get closer closer to the event and then dump, cut bags on anything that's not green at that point, and then leave maybe 1 or 2 to play for the actual event itself. So Zoom and Coupang so far are on my list of interest for this week so far. Let's take a look at AAP. Here's another one that's got really nice numbers, except for I'm noticing that the current IV is on the high side, but $2 move on average per day. They are anticipating $11.50 move, so that's a pretty good ratio. Good overall low historical volatility. Current IV percentile is on the high side, so we do have a spike there, but it can get larger according to the historical volatility. So AAP may also be an interesting one. We talked about snow already. I'm going to pass just because we're kind of in the middle of the historical volatility range, so that one does not. It indicates to me that we've already got a lot of volatility there, and we've got some risk because of the crush. BIDU, another one, looking pretty decent. We got about a 2-to-1 ratio between market maker and ATR. The HV percentile is on the low side. Current IV is high, but not too terrible historically. So BIDU could be worth a look if you like playing Chinese tickers. eBay, that doesn't look great to me. We got about a 2-to-1, a little over 2-to-1 for the market maker to the ATR. We're kind of right in the middle of the historical volatility range, so there's a bunch of risk for crush there. AI, which is a ticker I'm in long on, just in equities. So I will definitely be watching this one to figure out if I'm going to be adding after a loss or cutting after a beat. They did have a nice beat on their last ER, if I remember correctly. We're looking at about a 2-to-1 ratio between the market maker move and ATR. Historical and IV percentiles look pretty good, so this might be another good candidate. And then our final one for the day, guys, is at least out of this is Mara 2.6. They are anticipating you don't see this all the time. The market maker move is expecting a smaller than the ATR move, which is not a great sign. They're expecting kind of a flat play here. And the IV is not in a good spot here. So I would definitely pass on Mara, even though it's kind of in a hot sector with the, all the Bitcoin stuff kind of riding right now. So they may very well have a great ER with all of the activity going on in the sector, but I'm not going to get anywhere close to touching it. As I said before, so that's kind of the general mindset that I have when I'm going through and looking for opportunities. So out of this list, it was Coupang, TJX, Zoom, AAP, and AI were the guys that stood out as being interesting to me. I'm going to pull a couple of these filters out because I was kind of curious to take a look at like how the numbers shook out for like Macy's. Who else showed up on this list that I was interested in? So Macy's, we got to look at Zoom. Unity, I'm a little curious on. Devon, I'm interested in. I know I saw somebody in the chat talk about Kava. I don't know much about them as a company. Okta, I'm a little curious about just from like a cybersecurity standpoint. Let's see if there's anybody else on here. Yeah, there's a couple of cyber plays in here. That's kind of like where my day job is, so I'm always curious on those. Autodesk may have some interesting stuff going on. Polestar in the EV space. So, I mean, there's a handful of other tickers out here that I'd be curious about, but let's just quick strip out. We're going to get rid of the volume, and we're going to get rid of the pricing. I'm going to leave the options volume, right, because I'm still expressly not interested in playing illiquid options chains. So yeah, like Unity still didn't show up in here. Who did pop in here? Beyond AMC, I know I saw some folks talking about that. If we kind of look at, if we use the same process that we talked about before here, market maker moves, not expecting much out of this thing. Volatility is low. I think I'm not interested in really touching that for any good reasons here. Fisker, let's see, nothing real interesting there. Yeah, nothing else here. Paramount, where did they hit? Paramount 2-to-1. Paramount could be worth a look. Although I think, yeah, that ticker is pretty low, so unless they have a really significant move, it's going to be tough to get a strike price that is percentage-wise far enough away from the current strike to make it worth the risk. All right. So yeah, nothing jumping out at me from a name perspective, and then just a quick scan down for ratios here. There's Lee again. Yeah, Paramount looked okay from a ratio perspective. There's TJX again. Zoom, we talked about that one already. AAP, we talked about that one already. Snow, we're not touching. BIDU, eBay. And yeah, that's pretty much it, gang. So in a nutshell, that is my thought process. I will note these down. I'll throw them out in the Discord, and then I'll probably do a follow-up on this next week and just find out like how they went. I'm not planning probably on actually playing any of these with live money, but I might go into the paper trade account and throw a strangle in there just so we can look to find out what the performance was on these tickers as they went through the straddle, and find out whether this approach pans out as well as I think it does. All right, gang, that's all I got for you today. And it'll probably be the last time you see me do 2 videos in a day, but hope this was helpful, and appreciate your time. You guys have a good rest of your weekend. Good luck on ERs if you play any this week, and we'll see you around the bend. Cheers, gang.